and welcome to the Manatee Chamber of Commerce's webinar this morning on business assistance programs and what businesses need to know as they've accessed relief funds for their organization. My name is Jackie Dzelski. I'm the President and CEO of the Manatee Chamber, and we're grateful that you have joined us either for the live webinar or to view the recorded session after the fact. We have two phenomenal Manatee Chamber board members to join us this morning, but before I introduce them, I want to thank our webinar sponsors who allow these webinars and many before it to occur and for us to bring important information to the community and to our membership in particular. Those sponsors are Lepensi Plumbing, Pools and Air and Veritas Pest Management. So thank you so much to Lepensi and Veritas for their ongoing support of the Manatee Chamber's webinars and seminars as we look forward to being back in person with our members with these types of educational opportunities in the future. No surprise, today's topic was a member-driven topic based on feedback that we've collected over the past several months from our members and the greater business community, with business owners, nonprofit leaders saying, okay, we've accessed, thankfully, a number of the assistance programs that have been available to us to help us weather the economic difficulties that the COVID pandemic has presented, but now what? Here we are, almost 2 months before the end of 2020, and there are a number of business owners, finance committees of nonprofits that are saying, okay, we want to ensure that we are accounting for the assistance that we've received correctly for things like financials, but also particularly in relation to the PPP for forgivability. I want to give a shout out to the Manatee Chamber's Small Business Council. They have been vetting a number of topics and speakers to meet the needs and requests of our business community. I also want to thank our Platinum investors. Their logos should be on your screen right now. These organizations invest within our chairman's circle to be able to provide additional financial resources to support the Chamber's mission. So thank you so much to our Platinum investors. Before we get started, I want to give you a couple of disclaimers for today's webinar, one of which is, and I'm sure our speakers will reinforce this, you should be consulting the professionals that support your organization as we talk and think about all of the topics that we'll explore this morning. So please know that situations are fluid. There are significant differences between companies, but nonprofit sector organizations. And so you need to make sure that you're consulting professionals that support your business, like your bankers, your attorneys, your CPAs, as you explore and navigate these relief programs. So with that, I will get on to introducing our speakers today. As I mentioned, they are both Manatee Chamber of Commerce board members. The first is Mark Dunlop, Vice President and Small Business Relationship Manager for the West Florida market for BankUnited. Mark is a native of West Florida with over 25 years of banking and financial service experience. He holds a bachelor's degree in business management from Bob Jones University, and he was born and raised in Tampa. Mark moved his family to Bradenton in 1997 and joined BankUnited in 2015. And he is primarily focused on businesses with revenues up to $10 million. Mark lives in East Manatee County with his wife, teenage son, and 2 dogs. His daughter is a law enforcement officer in Chattanooga, Tennessee. In addition to his board service here at the Manatee Chamber, Mark is also engaged in our Small Business Council and our member engagement committee, and is on the finance committee for Turning Point. So Mark, thank you for that engagement. Next, Christy Cardillo, tax and business consulting partner for Carr, Riggs and Ingram. Christy joined Shin & Company, which is now Carr, Riggs and Ingram, in 2007, and she has more than 20 years of experience in private and public sector companies, along with international business, provides specialized accounting expertise for nonprofit organizations, small businesses, physician practices, manufacturing, and the list goes on and on. In addition to her accounting experience, Christy also has a background in human resources. She's very involved in the community as well, not only serving on the executive committee of the Manatee Chamber and our board, but she is also the board chair for Career Source Suncoast and president-elect of the Bradenton Kiwanis Club. Christy holds a Master's of Accounting from the University of Texas at Arlington and a BS in Accounting from the University of Florida. And with that, Mark, I believe I'm going to turn it over to you first.
Thank you, Jackie. Good morning, everybody. Appreciate y'all being here and appreciate the opportunity to talk about this important topic. The most common question I get today is, when can I apply for PPP forgiveness? When will you open your portal to accept applications? And so I just wanted to start with an overview of the program and then kind of some perspective on why you may or may not have been able to apply for forgiveness yet. Everybody remembers, I'm sure, how this program came about. And it was designed specifically to help small businesses keep workers on payroll. That was the whole part of this. The whole gist was to keep people employed. It provided a forgivable, low interest loan to eligible small businesses. And the key there was forgivable. I believe pretty much every client I know of that went into this program went into it with the idea that they wouldn't have to repay it. Applications were only accepted through SBA approved 7A lenders, and a lot of companies jumped through a lot of hoops to participate. A lot of non-bank lenders got involved, and it was good to see kind of a wide swath of people throughout our industry get on board to help with this program. And it was meant to support payroll and employee benefits, mortgage interest, rent, lease payments, utilities. So it was a great program, but let me remind you of some of the things that we kind of went through in that process. I'll give you a personal story. If you go back to March or April, I'm a loan officer. I make commercial loans. I got called into duty to become a loan underwriter, and I spent the next 6 weeks working pretty much every day, 7 days a week, trying to get loans through this system. And what we found in that process was that the approval process itself, the guidance we were getting from the SBA was very fluid. Every few days we would get new guidance on what documents were required, how certain entities could apply, what was available to certain entities and what wasn't. And I can tell you from personal experience that the process we followed at week 6 for approvals in this program was vastly different from what it was in week 1. And so there was a lot of uncertainty that came with that. So that kind of brings us to where we are today. Again, I mentioned the most frequent question I get is, why can't I apply for forgiveness yet? Go ahead to the next slide, if you would, Amy, as we look at forgiveness. Several things happened at the end of the loan period, which affected forgiveness. First of all, the time frame to use these proceeds was extended from 8 weeks to 24 weeks. Now that's a boon to most of our companies. If you'll remember, this program was designed to give you about 10 weeks worth of payroll, and you could use 75% of it for payroll and 25% of it for utilities, rents, mortgage interest. Going from 8 weeks to 24 weeks made this a lot easier to get forgiveness for most of our clients than it would have been if we kept it at 8 weeks. So that means that a greater number of our clients knew that they could get forgiveness because of this key change. The other key change, of course, you'll see their payroll percentage decrease from 75 to 60. That means you could use more of it for your rent payments, for your utilities, for the other things that were allowable. So it became easier to qualify for forgiveness. The other key change was that loans funded after June 5th went from a 2-year prepayment to a 5-year prepayment. So if you're not forgiven, those payments become a lot less onerous. And also, payments weren't supposed to begin, or actually don't begin, until 10 months after your election period. That means that for the bulk of our clients, they're not going to see any payments until next April or May. So there's a lot of angst around how do I get my application in. But what I'd like to remind you of is that there's really not that big of a hurry to get your application in, except for, I know we all feel it, kind of the overwhelming desire to get this off our plates and move on with our lives. So I don't want to downplay that. I understand that is a real feeling that most of our clients have. But understand that from a forgiveness perspective, from the SBA perspective, there really isn't a rush to put these through. So why have banks delayed accepting applications? Well, for a couple of reasons, and I think they're really kind of client-centric reasons. One is there's a lot of fluidity still to what forgiveness looks like, and we are kind of reluctant to put our clients through a bunch of hoops that may not be necessary. Maybe if you could flip to the next screen, you'll see that where we've come to today, there are actually 3 specific applications for forgiveness today. You'll see that if you've got a loan of $50,000 or less, there's a 2-page application, the Form 3508S. Now, the good news is that unlike most government forms, this really is a simple application. It should make forgiveness very easy for folks. But our groups, the bank, the Florida Bankers Association, the American Bankers Association, and I know that CPA trade groups and others are still lobbying Congress heavily to have automatic forgiveness bumped to $150,000 and not just $50,000. We really feel that it'll be a boon to our clients to just be able to use that simplified 2-page form for all loans $150,000 or less. Now, is that going to happen? I have no idea, but I know that we're still pushing hard through our lobbying groups to make that a reality. So if you're at 50,000 or less, it's going to be a very simple process. If you're at 50,000 and have had no decrease in payroll, then there's a 3508EZ form out there, and it's only 3 pages long, but it does have some more requirements as far as what you have to submit. And then for those of you that are over 50,000 and did have a decrease in payroll, unfortunately, the Form 3508 is 11 pages of, I hate to say it, of bureaucracy. So what are banks doing? I can tell you what we're designing behind the scenes is a portal that will allow you to answer some key questions, and then we will kind of walk you through what you need to do to get approved and create the application for you behind the scenes so that you're not trying to negotiate an 11-page document that is going to be really cumbersome and hard to come about. So the bottom line is most banks haven't opened their portal yet because we're trying to make sure that we aren't putting clients through more paperwork than they absolutely have to complete. Some banks have taken different approaches. There are banks out there who have started more aggressively processing applications over 150, kind of feeling that was the stuff we know what's going to be expected over 150. Let's go ahead and get those in process, but maybe delay the loans under 150 so that we don't put clients through more paperwork than they need. So what I would say is be patient with your bank. I expect that this week, you're going to see a lot more banks kind of come online with their processes. They should be reaching out to you. Whoever did your loan for you should be reaching out to you soon to tell you that the process is opened. But again, expect delays. We're going to roll this out. I can tell you what our plan is, a few hundred clients at a time, because we don't really want to slow down the process by trying to push everybody through it. And because there is such a long window to apply for forgiveness, we're going to try to manage that and kind of first in, first out. So the folks who got their loans the earliest will be invited first to apply, and we'll get through those as quickly as we can before opening up to the next group. So that's kind of the big picture behind the scenes look at why banks haven't just been clamoring to process your forgiveness applications at this time. What I'll say is that you should see that open up fairly quickly over the coming weeks as we get more clarity on what the expectations are. But again, expect changes. I would suggest that you pull up these applications. They're available on the SBA's website. I think we may have a link to it at this presentation. But look at these applications, kind of get your arms around what kind of questions are being asked of you and what kind of documentation is being asked of you based on these three criteria, and then start working with your CPA if you haven't already on pulling these documents together so that when your bank does open the portal, which hopefully will be in the next week or so, you're prepared. But again, don't be surprised if your bank tells you they're not ready to start taking yours yet, because they're probably going to try to meter these through the system so that we don't jam everything up at once and have a bunch of backlog with the SBA. So that's the overview from the bank's perspective. And I believe Christy will jump in now as we kind of move into EIDL.
Yes, thank you, Mark. I really appreciate you sharing the banking perspective. We get a lot of questions in our accounting office. The portal's open, or the portal's not open, and feel the urgency that people are having to get the applications done. And there are a lot of aspects to the choosing what application to prepare and gathering all the information, and people do have time to get this done. There shouldn't be a mad rush going on right now. Essentially, we are just starting to have clients that got funded at the very beginning meet their 24-week period, and we're starting to pull information together. To give you an idea, if it's a 24-week period and it ends on September 28th, you literally have till July 28th of 2021 to get your submission sent in before any payment. That's when the 7/28 would be when that first payment is due. So you have time. So we'll say that first. That extension is very helpful. What I'm going to talk about is some of the questions that I get in my office about documentation and what is the best thing for us to do, and how do you decide which form to use, and those types of things. And like Mark shared earlier, that $50,000 threshold, it might move on us. If our legislators are able to get it to move up to the 150,000, of course, I'm going to encourage clients to use that threshold to their benefit, because it doesn't require any documentation being gathered, which it's going to help in getting some of those applications processed too faster. I had a question come into my office. If I'm at 100,000, do I go ahead and do the long application, or do I wait to see if that threshold's going to move up? I've encouraged clients to wait and see. You have time, because it will be so much simpler to do the application for forgiveness if you can get it under the threshold for reporting. So as Mark said, the percentages of expenses, the 60% can be from payroll costs, health benefits, retirement benefits, and the state and local taxes like your unemployment costs. 40% of it can come from non-payroll costs, mortgage interest, rent or lease, and utility payments. And as you progressively move through those three applications, the documentation requirement increases. So for the 3508S, that's less than 50%, you have no documentation requirement. All you're doing is signing a form that you're self-certifying that you have used the money for payroll and for those other costs. When you get in, there's the two next forms, the 3508 Easy and the 3508. I kind of approach them together because you do have to determine that your payroll has not decreased in order to use the Easy form, which you have to go through some calculations on the Easy form. So you might as well, you need to look at your payroll also to determine that it's not decreased. If you look at the bottom of the Easy application, it gives you documentation that you should keep in your records that you don't have to submit. So you do, in a sense, have to go through the calculation and make sure you meet the requirements of the form. but you don't have to send that information in with the application. So both the 3508EZ and the 3508 require you to submit payroll. If you use a payroll company, like any of the major payroll companies, they already have the reporting developed within their systems. We are encouraging clients to explore that with their payroll company and use that reporting, those reports that they provide, because they've already gone through the calculations and what needs to be broken out because they have all your payroll data. So use those reports. They actually, most of them are labeling what line on the form the numbers actually need to be reported on. And they label things to match up to the application. So I would say explore those reports. You usually have to go through an admin login to get to the reports. If you prepare your own payroll internally and you use your own software system, you need to use your software as best as possible to create the payroll reports that you need. And you will have to manually limit the officer and employees that are paid over 100,000 to that 100,000 compensation limitation. My recommendation to most of the clients I have is there are spreadsheets, Excel spreadsheets that are available to the public. The AICPA, if you go to aicpa.org, they have a spreadsheet workbook that is available to the public. You don't have to have a membership to get to it. I've tested it, so I know. So I would recommend using that worksheet because the AICPA, which is the trade organization CPAs belong to, they've actually documented in notes what you need to be thinking of as you're completing that application. It'll help you to determine whether or not you have a payroll reduction. It will help you to determine if you have a headcount reduction. It also has sections on it that go through whether or not you have employees that were offered rehire and refused, which we'll talk about in a minute. So, and the other best piece of advice that I'll give on these payroll reports that you have to provide is if you need help, seek help. Don't guess, ask questions. There's the resources of your accountant that you use, get them to help you with determining what you should report and what you shouldn't. And seek help on the payroll websites for the payroll companies. Some of them are offering information to the public. But if you're going to use a template Excel, I would say make sure you're using it from a reputable source. There are some out there that may not have all the rules under their belt. So I would make sure that it's a group that is a reputable source that you're getting that template from. That's the reason why I said use the AICPA template. The benefits that you can put to the application, what I would encourage, there's the health insurance, which includes your vision and dental, and it's the employer payments for premiums, and it is only for employees, which means if it's an owner employee, so if you have a corporation that you have a owner inside the company that's paid as an employee, their premium does not count. So you have to take that back out. Retirement contributions paid to the employee's retirement plan by the employer, and that's employees only. And the state and local taxes assessed for compensation. So your unemployment taxes that the state assesses on your payroll. You want to pull the invoices that these were paid from. You want to pull the one from your February 2020 month. You want to pull the ones during your covered period or your alternative period that you're choosing. The covered period is from the date you were funded to either the end of your 8 weeks, or if you're choosing to go out to the 24 weeks, at the end of your 24 weeks. You can also choose a date in between 8 and 24, which is based on when you apply. I encourage everyone to go out to the full 24 weeks to make sure you have enough spent to cover for forgiveness. If you feel that the 8 weeks covers you for forgiveness, use the 8 weeks. But most of my clients are going out to all of the whole 24 weeks. You can choose an alternative covered period. And basically what that means is you may have gotten funded in the middle of a payroll period, which makes it difficult to pull reports from your payroll systems or even from ADP. So what you can do is choose to start your covered period at from that funding date, go to the first of the next payroll period that begins, and pick that as your beginning period and count the 24 or the 8 weeks out from that point. It makes pulling the reports a lot simpler, or then you don't have to prorate. So you're going to want to pull your health insurance statements that show where you've paid. The February statement, you want to pull everything in your covered or alternative covered period. And then you also want to pull a statement that is the final payment. So they need to be able to see where the payment was made on those statements that you're pulling for verification. So it needs to be the invoice and payment verification. The processor is going to be looking for whether it meets the criteria of an insurance premium or an employer contribution or state and local tax, and that they can see on there that you paid it. I'm also attaching from the detail from their general ledgers where those payments were made as well. For each item, I put them all in one PDF by item. So you'd have everything for health insurance in one PDF, everything for retirement in one PDF, and make it easier for uploading your information. You are also going to have to give as documentation copies of your bank statements or third-party payroll service reports that show the compensation, your tax filings for payroll for 941, so your filings you send to the IRS, and then also what you send to the state, whether it's a state withholding or an unemployment for this first, second, and third quarters of 2020, depending upon when your covered or alternative covered period is. And then like we spoke about, your payment receipts, your payment invoices. You are also going to have to provide your average headcount and FT of full-time employees as of January 1st, 2020, and at the end of your covered period. And there's a couple more that you'll have to do if you're trying to meet different safe harbor qualifications. So there are other eligible expenses that can be put on the application. The same process of preparing documentation for each one. I'd have a PDF that has all the months that you're saying that you want to claim, that shows that it was invoiced, and the statement that shows that it was paid. The first one is for business mortgage interest on real or personal property debt. This should be something that you were encumbered prior to 2/15/2020, and it does not allow for you to have any prepayments on those debts. So just the current payments that you would have been trying to keep current on. Also your business rent or lease payments for real or personal property. You are going to have to provide a lease agreement that shows it was enforced prior to 2/15/2020. So it can't be something you went out and leased after the start of your cover period. Then also your utility payments for services that had already been established prior to 2/15/2020, and they include electricity, gas, water, phone, transportation, and your internet access. And I'm sure we all appreciate the internet access part because that became crucially important to all of us to make sure we could keep that running. So for business mortgage, there is on the actual application where they're asking for a copy of the lender amortization schedule and payment receipts. I know it says copy of canceled checks, but I think it's easier to give the account statements that show where the payments have been made. Lease, we said lease agreement. And the utilities, it's just a copy of your invoices showing what was invoiced and then showing the invoice that shows you've paid for the previous invoice so that you can tie that out to what you put in your application. So that's the documentation that you have to have for the 3508 EZ, and you have to certify that your payroll has not decreased. Now they're going to get your payroll, so they will be able to tell. For the 3508 application, which is the 11-page application, and I know it seems daunting, but it can be done. This is the one that requires the additional documentation. This is the one that you'll have to have calculations that you show in the application or attached to it, which most people are having to attach because if they have more than a few employees, that shows if you have had less than a 25% salary reduction, and that you haven't had a reduction in your full-time employees. And there's some safe harbors on full-time employees that you can use, and it is based on your average full-time employees. So there are 3 choices on the 3508 application for reduction calculation. You can check that you've had no reduction in employees or average paid hours, okay? Or you can pick the safe harbor, the first safe harbor. That first safe harbor is very specific. It is if you are unable to operate between February 15th of 2020 and the end of your cover period or alternative cover period at the same level of business activity as before February 15th of 2020. Due to compliance with the requirements established or guidance issued from March 1st to December 31st. Now, I left out some of the language that was on there. I mean, this is basically if the government has shut you down in some way, whether it was OSHA, the Centers for Disease Control, or in any of that guidance where we were shut down. If you were unable to operate during March 1st to December 31st, then you can mark this. There's only a few specific situations that this will apply to. And then we have safe harbor number 2. So basically what safe harbor number 2 comes out to is if your total average full-time employees from February 15th of 2020 to April 26th of 2020 is greater than total average FTEs for the February 15th, 2020 pay period. If it's greater than that payroll period, then you've satisfied it. If December 31st, 2020 or date of application total average FTEs are greater than what you had on February 15th, 2020. So basically you're establishing that you had more employees during those periods than on February 15th count. So it's whatever that payroll was that February 15th falls in, what was the count of your number of employees. Either one of those gets you out of having to do the further calculation. If those don't apply, then you have to do the full calculation by employee, averaging their reduction. And this is the point that I would tell you that you really need to be using the schedule, the Excel schedule and the template that feeds into the calculation. I'm using it for every single one that I'm preparing, only because there are so many parameters to calculating that reduction in payroll. You have to put down what their average hours are. You have to put down what their average payroll was from 2 different periods, compare them to determine if there's been a reduction in pay. If you have tried to rehire people and your FTE count went down and you had people that refused to come back to work, you can exempt out of having to report that employee on your schedule, in your FTE counts. There are some things that you have to have as documentation. You do need to show that you inform the state unemployment insurance office of any rejected rehire within 30 days of that rejection. So you do need to have a documented letter that shows you offered them their job back, and a documentation that either they didn't respond in 30 days or that they sent something back and said they didn't want to come back. You do have to notify the unemployment office that they refuse to return to work. You also want to maintain that documentation and maintain that written record if you're not going to include them in your calculations. You can go to the next slide. So, salary reduction calculation. Each employee should be tracked for wages during the cover period as well as the rate of pay. And you want to pick the 215 rates of pay compared to average wages paid over the cover period from beginning to end. If they've been reduced, then you're going to have to put that reduction is going to show. It will pull up to the front of the application, reduce the forgivable percentage. You will also need to limit your employees that are paid over $100,000 as an average salary to that $100,000 limitation. There's also a question out there still about What do you do with employees who weren't employed in the first quarter 2020 and now they are employed? Do I include them or do I not? And that salary reduction, you really don't have anything that you're comparing them to if they weren't on your 215 payroll. I've seen some say that you should not include them. I've seen some say that you keep them in there. I would say you need to be consistent. If you're not going to include them in your FTE count, then you shouldn't include them in your salary comparison count. And hopefully they're going to give us a little more guidance on that, how the SBA wants us to handle that part of it. So the next piece, and when I go through this part of it, it does seem to help people determine, you know, what, it helps to alleviate some of the urgency to get my application in, because I think a lot of people feel that, you know, in order to show that the loan is forgiven on their book income, they have to have their application submitted. And actually some people have told me, well, we need it approved in order to do this. You do not. For your book income on your financials, which some people may do this or not, but if you have GAAP, you keep your income statement and your balance sheet on an income tax basis, you may want to consider this year changing it to a book basis. We do that all the time in order to show our fixed assets on the balance sheets of our tax returns at GAAP or an accrual basis instead of at a income tax basis, to show that there is equity in your fixed assets. So it's fine to do it in this situation as well. But for book purposes, the AICPA did come out that, and FASB came out with, you know, in order to record the income from the forgiveness of debt, you don't have to have the application approved. You can't make a reasonable assurance that you know that this government grant will be forgiven. You can estimate the amount of forgiveness, and it can be recorded as income for book purposes as an extinguishment of debt. You know, you just have to have a reasonable assurance that the conditions for forgiveness have been met. So you need to probably go through the calculations and determine what you are estimating that forgiveness is going to be in order to record it. Every client's, every company's in a different situation of their financials. You know, figuring out, some people really want to show that offset of those expenses to help for their financials. And if you believe it's going to be forgiven, then you should show it in the income. Now, for tax purposes, for your tax return, as it stands right now, the way that it is presented is that the income from the forgiveness of debt is not includable as taxable income. But they are also not allowing you to deduct the expenses that are used to qualify for that forgiveness. So it's crazy when I explain it, but for book purposes, the rules are the opposite of what they are for tax purposes, and they all come out to the same net place. So when you do a financial for presentation, if you're getting audited or reviewed financials, they're going to show that forgiveness as income, as other income. For tax purposes, it's going to be a reduction of your expenses that were allowed to qualify for forgiveness. So you're going to see it presented differently on your tax return than you probably would on your financial statements. My point is, for your financials to show that forgiveness on your income statement, you do not have to have your application approved. You do probably want to go through the calculation and probably submit it at some point, but you need to at least know where you think you're going to come out. I know that's clear as mud, but it does help to pick it up as income. So best practices, I would say most of the clients I have that I'm talking to, they're going to wait for the 24-week filing period to make sure they can include as many expenses as possible to show that the forgiveness is met, that they qualify for the forgiveness. You should evaluate with your tax professional if applying for forgiveness is the best option. So that's come up in the last few weeks with a few clients and myself. You know, right now the deductibility of expenses resulting in the forgiveness of the PPP loan will not be allowed to be deducted for tax purposes. In some situations, I have clients that allowing it to be a 1% loan when you look at the time value of money is going to be the better choice, because if you can't deduct those tax deductions, you're going to have inflated income that you're paying a tax at your tax rate on. So I would say talk to a tax professional, evaluate which one you should do. Is it better to have a 1% loan, or is it better to go ahead and apply for the forgiveness? And then wait to see if that $150,000 threshold is going to get you to where you can apply for a simplified application. I would say if you have a question about that last bullet point, I would go look at the spreadsheet on the AICPA's website to see just how complicated it's going to be to go through the process of evaluating. So, you know, the interaction of the PPP loan forgiveness and the EIDL was the other thing that I was going to talk about. It's come up, you know, the EIDL was an emergency grant that was enacted to put money in the hands of people very quickly. It has an automatic forgiveness to it. And it was $1,000, the advance part of it was $1,000 per employee up to $10,000. It does have some interaction with the PPP. And when you go to do your PPP application for forgiveness, you do have to reduce it by the amount of your EIDL advance because it was already forgiven. So some people, I mean, anybody who got the EIDL loan, EIDL advance, that will probably turn into a PPP loan because it's going to have to be reduced from the forgivable portion. And some people, that is surprising them. So I want to give you an example. So let's say you received an EIDL emergency grant for $3,000 in the very beginning, and then subsequently you received the PPP loan for $25,000. And as long as you use all of the PPP within an 8 or 24-week period, $22,000 of the PPP will be forgiven, and the $3,000 EIDL grant advance, it will need to be paid back within the 2 or 5 years, depending upon your timing, at the 1% interest rate. Now, one thing I would like to point out is by law, these PPP loans that they're converting into, you know, SBA usually has a prepayment penalty. There is not a prepayment penalty. So if you just want to pay it off, you can pay it off. You can let it convert into a 1% loan, but there is that portion of the EIDL that will turn into a loan for some people. And I think I've probably talked enough. I think that Jackie probably wants to do some of the Q&A with us at this point and talk about the CARES Act.
Thank you, Christy. I am going to touch upon the Manatee CARES Act program because we have a significant number of businesses in Manatee County, Sarasota County, and our surrounding sister counties that have accessed the CARES Act grants that are available for businesses thanks to the federal CARES Act program. So with that, we can advance to the next slide. There were 4 main grant programs available through the federal program to be administered by Manatee County. I've listed 3 on the screen because they're applicable, mostly applicable to the attendees on today's call. There is a 4th category that was to support agencies and governmental entities in a number of areas in which they needed to ensure the safety of the public and their workforce within public spaces. But the 3 that are most pertinent to the chamber membership are the Safety First Small Business Grant. Hopefully you all know that we are currently in an open round, meaning you can submit application as of today for the Small Business Safety First Grant. Those grants allow small businesses to request up to $5,000 to cover expenses related to PPE. So those safety and health measures that you're taking to protect your workforce and your customers and clients, and also request up to $45,000 of documented business loss related to COVID-19. So I strongly encourage anyone on today's webinar that has not yet reviewed the criteria to see whether or not your small business might be eligible to literally do that as soon as we end the webinar. because we're not certain how long round 3 will be open. It will depend upon the volume of applications that come in, because it is a finite amount of funding that's available. So please check that out if you have not yet done so. One of the second areas is the community health and well-being area, which primarily applies to nonprofits as well as community organizations. It too is currently in an open round, meaning it's this grant program is accepting applications. Round 3 allows nonprofits to request up to $5,000, similar to the small business grants, to be able to cover PPE, health and safety related costs for ensuring that they are able to do what they need to do to protect both their clients as well as their workforce. There is also an opportunity for organizations, nonprofits that are helping with food distribution at this point. So that's what's available to nonprofits and community organizations in the current open round of community health and well-being grants. And then finally, the Housing Assistance Program, which makes available funding to cover delinquent rent and mortgage payments for residents of Manatee County. Round 4 of what they call HAP, the Housing Assistance Program, opens tomorrow. So we expect a significant flurry of activity of residents who have financially been impacted by COVID-19, meaning they are able to document a decrease in income related to COVID-19 to be able to help cover delinquent rent and mortgage payments. The eligibility criteria for all of these programs, as well as the applications and list of documents for each of them, is available at mymanatee.org/Manatee CARES. So if there are questions about those grant programs, I am happy to answer those. Next slide, please. Also available at mymanatee.org/Manatee CARES is a dashboard for which you can monitor the amount of funding that is coming into our local community through these CARES Act grant opportunities. And I'll tell you that if we're able to access the full amount that could potentially be allocated for Manatee County businesses and nonprofits, residents, and governmental agencies, it could mean a $70 million impact for our local economy with those federal dollars flowing into our community. So we are so grateful to Manatee County government for the significant infrastructure that they have stood up in just the past few months. Really, I've heard the analogy, they've been building the airplane while they're flying it to be able to handle what have been thousands of applications that have come in over the past several months for these grant opportunities. I will say, in my personal opinion, one caveat related to the dashboards that you'll find on Manatee County government's website is that there is a certain amount of lag time. As applications come in, they're able to be processed, there's follow-up documentation often needed. Then an application is approved, an agreement needs to be signed between the entities, and then in the case, to use an example of the nonprofit grants, it's a reimbursement process. So even once the funding is approved, there's a process on the nonprofit side to be able to submit the appropriate documentation for reimbursement. So there's always a lag, in my opinion, on the dashboard, understanding some of the timing differences that happen during the different phases of these grant processing, review, approval, and distribution or disbursement processes. So I do encourage you to take a look at that because it is a significant financial influx to our local community through the CARES Act. I'm not sure if there's one more slide on there or not. There are, just a reminder of those websites that I've now said verbally, mymanatee.org/Manatee CARES, and then a great wealth of information is also available at recovermanatee.com, which is the website that the Chamber stood up early in this COVID pandemic to be able to kind of conglomerate all of the information that's been out there to help businesses and residents and nonprofits. So you'll find links to official, credible sources of information related to assistance, related to CDC guidance for workplaces based on specific industries, and the list goes on. I could spend an hour just talking about the information that's available at recovermanatee.com. But what we'd like to do now is move into the Q&A portion of today's session. But before we do that, just so we can get a poll and understand better the audience that's joined us, at least on the live webinar, we're going to stand up a poll here. Your responses are anonymous, but we're really interested, based on today's audience, which of the programs that are available for businesses and nonprofits has your business or organization impacted? You should be able to select more than one if you've accessed more than one of the assistance programs. So hopefully you're seeing that poll up on your screen. If you could go ahead and indicate which of the programs your business or organization or you personally have accessed, and then click submit. We'll give it just a couple of seconds to be able to tabulate those results. As a reminder, if you could please use the Q&A feature of Zoom. I'm going to be helping Mark and Christy keep tabs with the questions that have come in. We'll do our best to cover all of the questions. However, we may have to follow up with you after the fact. So there's our results, at least based on today's attendees. So 3/4 of you have been able to access the PPP, just over half Manatee County CARES Act grant programs, and about 1/3 of you have accessed EIDL or EIDL. I hear multiple pronunciations. So thank you for that feedback. It's something we're interested in knowing. So in thinking about the questions that have been submitted, let me take a look here. So Mark, I think that this was submitted early, so you may have touched on this and it may have been answered, but given the extension to 24 weeks for the PPP, can a business still choose to use the original 8-week time frame?
Yes, they can. They can do 8 or 24, or Christy, correct me if I'm wrong, there's also a chance to do an alternate time frame depending on how your payroll fell.
Correct. You can do 8 weeks, or if you know you have met the criteria and you want to submit at 8 weeks, you can do that. But that's based on your submission date, or you can go all the way out to 24 weeks.
Thank you. Also related to the different percentages for forgivability, if your home is your office, how does that relate to the idea of business mortgage, of a mortgage for your business?
So generally, when you use your home as a business, on your tax return, it's a percentage based on the square footage that you use of your home. So that's a really good question, and I don't know that I know a full answer to it. So I will probably have to go look that one up. But generally, the interest that you deduct on a home office is not, it's a home mortgage. It's not a business mortgage. So I don't know that I've seen anything in the FAQs, but I will go and look that one up for her.
Thank you. And Mark, I know you have told us that one of the most regularly occurring questions you're hearing is when can, at least for your bank, for BankUnited, is when can I start filling out my forgivability? Have you processed any yet, or are there some lenders that have opened up the portals, or are most still dealing with such a ever-changing environment that they're not yet standing up those portals?
So we have not. The feedback I got this morning is we expect to have the portal open this week or early next. I think it'll be open probably by the end of the week. I have seen banks that have taken applications for only people over 150. So there have been a handful that have actually gotten through the SBA. But this is one of those processes where most banks don't want to be first, just because of the things that change and the fluid nature of this. We really don't want to put our clients through a lot of unnecessary paperwork if we can avoid it. So I think most banks, from what I've seen, have taken a wait and see attitude. So we can get some feedback from the SBA on the few apps that have trickled through, what they're seeing as problems, how they want to change things before we subject our clients to it. But again, I think the next week or two, you'll see most portals open up.
Thank you. Christy, I believe during your presentation, you were referring to a website related to a spreadsheet. There's a question about being reminded of what that website for the spreadsheet is.
So it is aicpa.org, and when you get on that site, it's the American Institute, I think it's American Institute for CPAs. I forget what the abbreviations are for. But when you go on there, if you click on out there, there's a section that's all related to COVID-19. They have a spreadsheet. You can even search on that page for PPP loan forgiveness, and that spreadsheet will come up that you can use. They let you download it.
Great. Thank you for that. And follow up with us, please, if you need a reminder or didn't quite get that acronym correct. We'll be happy here on the chamber staff side to help you with that. Christy, there was a question about a specific example that you used, saying that if the PPP loan was for $100,000 and you have qualified expenses of $80,000, your loan will be forgiven. However, you're really being taxed in the end because the $80,000 in expenses will be disallowed for the purpose of taxes. Is that correct? Which means they actually are being taxed.
Well, yes. So that's the whole reason why it's in Congress right now, that they're trying to get the deductibility of those expenses restored so that the companies can deduct them. Because right now, if those expenses are used to be forgiven, so you have that loan forgiven, you are not going to be allowed to deduct them on your tax return. Therefore, it's going to create more taxable income to you in that year. If you're in a loss position, you know, it's reducing your loss. But for some companies, they actually have net income this year. It's going to increase, you know, what they have to pay out in taxes. Now, remember, it was cash given to you that was $1 and taxes 37% of that at the highest bracket. So it's not dollar for dollar. You should remember to think in the form of tax versus cash. Cash $1, tax 37 cents. Can't say that enough.
Thank you. There are a number of questions, it appears, that are coming in related to CARES Act. So I will try to scroll through these and talk at the same time. So a question about time frame. For those of you who either personally or you have clients with whom you work that have submitted during one of the earlier rounds of the CARES Act grants through Manatee County, asking about the review and approval process. And I will tell you that specifically related to the small business grants, they are, I think don't quote me on the exact number because I don't want to speak on behalf of the county, but my understanding is they're about 3/4 of the way through processing round 2. And again, the current application cycle is now in round 3, but they're just finishing up round 2. So they will have round 3 waiting to process. If any of you on the call or any clients that you want to refer, you are welcome to call the Manatee Chamber. We are actually providing helpline services to the county related to the CARES Act grants. And we have chamber staff members who have access to the software system that the county is using to be able to give status updates. There's a number of things we cannot do with our view-only access, but we are able to give status updates. That doesn't mean we can tell you that it's going to be 6 days before your application is addressed, but we can give you an indication as to what we see in the system related to processing and timeline. With regards to the CARES Act, also reporting requirements for the grants. So for the small business grants, again, up to $5,000 is for expenses related to PPE and any conversions you need to make in your workspace to be able to physical distance, things like that. So if you've bought cleaning supplies, if you have, ordered boatloads of hand sanitizer and hand sanitizing stations, if you have purchased or been able to secure plexiglass dividers for your front desk team, those types of expenditures would qualify for that up to $5,000 in PPE. With regards to the up to $45,000 grant that's available for small businesses to cover documented losses, on that mymanatee.org/Manatee Cares website, there's a checklist of the documentation you will need to provide to be able to prove that you have documented losses. There is a spreadsheet related to P&L, and so you'll be documenting revenue and expenses with comparisons to the past in order to show that those documented losses. Again, if you have questions as you're accessing that application, don't hesitate to call the chamber and let us help answer hopefully some of those higher level questions. And if we need to dig further for you, then we're able to connect you with a staff member at the county related to those. But again, that $45,000 is to cover documented business losses. Can the Manatee grant monies be used for AC repairs or replacements? Not that I know of. I don't believe that you would be able to say that those are related to COVID-19, unfortunately. So I would question whether or not those are available, but I encourage you to read the criteria and eligibility yourself and make that determination yourself on whether or not you want to apply. Is there a deadline for use of the Manatee CARES Act grant monies? There are some deadlines related to, or timeframes related to the funds, and there's somewhat of a variance, I would say, between the different grant programs. For the small business grants, again, this is losses up to the point at which you apply. Starting, I think it's March 1st is the date that they use. It's a date in March when all of this started and the governor's safer at home orders began impacting local businesses. And so it is a time frame in which you have to be able to document that loss between that start date and the date that you submit your application. As far as the use of the funds, it's really to cover loss in the past now at this point. So there's not a time in which you have to expend, because it's not like paycheck, the PPP program that's to cover future at the time, future wages. It's not related to wages like the PPP is. With regards to nonprofits, the nonprofit grant program is on a reimbursement basis. So once your program or your expenses were approved through an official agreement after your application was approved with the county, it's then on a reimbursement basis. And my understanding, unless the deadlines change, nonprofits need to be able to submit all of their receipts and their documentation of the programs for reimbursement by the end of the calendar year. Again, the caveat over all of today's presentation is some of these are moving targets and the situation and environment is changing. But as of today, that's my understanding of how that will work. Trying to see if I've missed any other questions. I believe I've covered them all. So with that, we are 3 minutes over, but I want to thank Mark Dunlop and Christy Cardillo, two super engaged Manatee Chamber board members who wanted to share some information with all of our members and business owners out there that joined us both for this live webinar and will also watch it in the future as a recorded webinar. If you have feedback for the Chamber on other topics for which we could bring expertise to the table through a webinar or seminar, I encourage you to do so. We would love to hear your ideas on how we can be of even greater assistance to you. With that, I want to once again thank our sponsors, Lepensi and Veritas. Thank you so much for your ongoing support of Chamber educational opportunities. I hope you all will have a great afternoon. And if there's anything else that we can help you with, please don't hesitate to reach out to the Manatee Chamber of Commerce. Thanks. Have a great afternoon.